The lot of surveys has been done. The survey suggests that most of the retail investors, they have started their stock market investment journey during the COVID bull run. Friends, when stock market rises, it will attract a lot of new investors. Many retail investors, they enter the stock market during the bull run. They will exit the market during the correction time. Friends, one thing we need to understand, stock market, it won't always go up. It will fall also. But when it falls, it will fall very badly. In that time, most of the retail investors, they will exit. Friends, stock market investment is not a cakewalk. It is highly volatile in the nature. If you want to invest in equity market, you should be ready to take 15 to 20% of negative return. In the longer run, definitely stock market will go up. It will create a huge wealth in the long term. Hello friends, this is Vijay and welcome back to my channel. In this video, I'm going to discuss about 5 investment lessons for new investors. Friends, you can stay till the end because you'll be learning a lot in this video. Let's get started. Point number 1, stock market, it won't go always up. It will fall also. When it falls, it will fall very badly. Friends, if you look at the stock market history, it can be US, it can be Europe, it can be India, across the globe, equity market always go through the cycles of ups and downs. If you look at the Sensex, over the last 40 years, there have been a many correction in the market. There have been a many ups and downs in the market. We call it as a bull market and bear market. During the Harshad Mehta scam, Sensex corrected around 40%. During the 2000 in dot-com bubble, Sensex corrected around 40%. During the 2008 in economic recession, Sensex corrected around 60%. During the COVID, market corrected around 30%. Every time when market corrects, it will recover and reward for the long-term investors. During the bull run, stocks will also rally a lot. That's why they will become expensive. Later they will correct. That's why there is a correction in the market. Point number 2, diversification. When it comes to the long-term investment, diversification, it will play a very important role. If you're new to stock market, if you're beginner in the stock market, then you should have good exposure in mutual fund, because mutual funds are one of the safest investment option. Mutual funds are managed by the professional fund managers. They will be having 10-15 years of experience in the industry. They will be having a team. That's why if you're a beginner, you should have good exposure in mutual fund. With regards to direct equity, you should have 70% of allocation into large cap, 30% of allocation into mid and small cap category. Large cap will give you more stability to your portfolio. Mid and small cap will give the growth opportunity. Point number 3, don't invest based on the tips. Most of the retail investors, once they enter the stock market, they will commit this mistake. They will simply trust the tips from friends, relatives, colleagues, which will spoil their entire financial life. Friends, nowadays a lot of free tips channels are available in YouTube, in WhatsApp, in Telegram, but don't trust them, which will spoil your entire financial life. Point number 4, don't try to time the market. Friends, every investors, they want to buy at low and they want to sell at high. Friends, it is not easy for all the investors. I would like to give one example. During the COVID time, Nifty has corrected from 12,000 to till 7,500. In that time, very few investors, they have invested. Most of the retail investors, they did not invest because they think that Nifty will fall further. But it did not fall. It recovered. Later, it touched the highs of 12,000 mark, 13,000 mark. In that time, most of the retail investors, they have invested. So that's the reason, instead of trying to time the market, what you can do is you can invest in a systematic manner. Irrespective of the market levels, automatically your investment will get average. Point number 5, controlling our emotions is very, very important. Friends, when it comes to the long-term investment, controlling our emotions is very, very important. During the bull run, we will become too greedy and we will start investing more. But that's the time for selling. During the correction time, we will become panic and we will start selling our portfolio. That is the time for investment. That's the reason during the bull run, we should not become too greedy. during the correction time, we should not become too panicked. Friends, in this video, we discussed about 5 investment lessons for new investors. If we summarize the point, the first one is market, it won't go always up, it will fall also. The second one is diversification. The third one is don't invest based on the tips. The fourth one is controlling our emotions is very, very important. The fifth one is don't try to time the market. Friends, I hope you find this video useful. If you like this video, please to subscribe, please to share it with your community. Thank you so much.